Pandora Media online radio company raising $235 million, very close to that in its IPO, pricing at $16 a share, almost double what was expected, clearly higher than our next guest estimate of $6 per share. Rick Sommer is with us now. He's a senior equity analyst at Morningstar. He's on the phone with us right now from Atlanta. He is making the bearish case for Pandora. So, Rick, your bottom line here is don't believe the hype. Why don't you think this company can be profitable even by next year?
Well, I think we're looking at a company that really has a lot to prove here. We're looking at a business model which, we can all see in the S1 has not proven to be profitable and has some challenges even more in front of it. I think, too, there's certainly a likelihood that costs are going to continue to increase for this company. And three, we still don't even know what the competitive environment looks like. They have a lot of competitors standing in front of them that are well-financed, that are willing to pay labels and willing to pay higher royalty fees than Pandora is, and it just doesn't look like smooth sailing necessarily for Pandora going forward.
Do you have any optimism? I mean, it doesn't sound like this is the case, but what if Pandora were able to negotiate better royalty fees going forwards? There are some on Wall Street who say that's possible. Pandora knows it's a problem and the company is working on it.
Yeah, it certainly is possible. I think that what we need to bet on is what is likely. We spent some time speaking with the Copyright Royalty Board, speaking with some music labels. There's not a general feeling or a care about what Pandora's business model is. And I think that the bigger issue is we still have some looming giants that are willing to write pretty big checks. We've heard rumors of Apple. We've heard rumors of Google being willing to write checks between $150, $250 million. These would really trump in licensing fees what Pandora is paying today. So the willingness to bend over backwards for a Pandora when we have other folks that are willing to pay and write larger checks is going to be a challenge.
What about the fact that you feel like Pandora is doing this, it seems like, for bad timing purposes and that the company just needs money?
Well, they absolutely just need money. I mean, we look at this is a company that was at death's door about 3 years ago. They were able to kick the can down the road and renegotiate some more favorable rates. But look, if we were to look at the economics of the business in 2015, where rates will increase about 40% from where they are today, we're looking at a company that would pay out about 70% of their revenues in content costs alone. That doesn't even account for sales and marketing costs and general overhead for the firm.
What about the fact that we all use Pandora? I mean, you have a playlist. Eric and I do too as well. I mean, it's pretty 90 million users, has to stand for something. And the fact that we use it mobile and at the PC, if they can get those mobile ad rates up, if they come up for the entire industry, shouldn't that help Pandora?
It should absolutely help them, and we're really baking that into our assumptions, into our $6 fair value. Right now, though, we haven't seen a lot of encouragement. We've seen ad revenues per user decline over the last 5 quarters. We've seen ad revenues per listener hour decline over the last 5 quarters. Whether that's being driven by poor ad inventory or whether that's being driven by mobile, we aren't sure yet. But the bigger issue is you think about ad efficiency. If those revenues go up by 40%, that only covers the cost increase at that time. So we haven't had a substantial change in that business model yet. So we need to have an incredible uplift in those ad revenues per listener hour. We got to remember the upside of that is terrestrial radio is still probably about twice as efficient in converting those listener hours into ad revenues.
Rick, we thank you so much for sharing your thoughts. Rick Sommer, you heard him there, senior analyst at Morningstar.